All right, so condo inventory in the Fraser Valley is it's at all-time highs for the most part right now, and people are, I guess, holding back because of all of the uncertainty that is in the market right now, as you guys know. So I'm going to go over this article with you guys that states Canadian housing markets struggle as U.S. trade woes mount. The impact of U.S. tariffs and chaotic back-and-forth threats are rippling through the housing markets across Canada, and the uncertainty isn't likely to fade anytime soon, which is shocking because like what Trump got sworn in on the 20th, I think it was, and then they started talking about tariffs. I don't think it was right away. I think he got in and then the tariffs came up maybe like a week or two after. And now it's March 14th. So these guys have been arguing about tariffs over Twitter for like over 45 days at this point. And I say arguing because it doesn't even really seem like a negotiation. It just seems like they are literally arguing with each other over Twitter for 45 days now. So you would think that these, at some point, there would have to be some certainty about these tariffs, right? And I mean, where are we right now with the tariffs? Are they, I think they're 25% and they're on right now. As far as I know, they were 50%. Now they're back down to 25%. Just insane. So the assistant chief economist at RBC dissected the data and basically said that the mere threat of a trade war has dampened confidence, sidelined buyers, and put downward pressure on prices. And if tensions escalate further, the effects could become even more pronounced, which I completely agree with. The economist explains in his monthly report any signs of market optimism that emerged in January, which was a lot, mostly from sellers, and buyers too, quickly vanished in February, as threats from U.S. President Donald Trump had Canadians increasingly on edge. Hogg also points out that a series of major snowstorms didn't help either, keeping prospective house hunters at home. Early market reports show a notable drop in sales activity, with Toronto experiencing the steepest decline, followed by Vancouver, Fraser Valley, Calgary, and Montreal. While demand softened, a supply surge, a wave of new listings in January has given buyers more options than they've had in years, particularly in Vancouver, Fraser Valley, and Toronto, where the balance of power has now shifted in their favor. So if we check this out, we have sales in blue, new listings in yellow. So Vancouver, you have a drop of 11.7 in sales, but you have a rise in 10.9 new listings. Fraser Valley is down 25.5% in sales. This is year over year. And then up 11.6% in new listings. You have Calgary down 19.3% sales, and then new listings only up 4.4%. So Calgary seems like they're just at the beginning of what Vancouver has been going through for the last 3 years. That would be my guess. And that's why I've been kind of alluding to maybe stay away from Calgary for the last 18 months to 2 years. I haven't thought it was a good idea to buy in Calgary because it seems like we are over 3 years of the way through a correction. It now seems like Calgary is just about to enter that correction. Again, I could be wrong, but that's what it looks like is happening. Edmonton performing really well, but again, sales down 7%. New listings are only up 0.4%. Toronto sales are down 27%. But new listings are only up 5.4%, which is half of Vancouver and less than half of the Fraser Valley. So, I would actually say that February was worse in the Fraser Valley than it was in Toronto because you had way more new listings in the Fraser Valley. And then Montreal, you have new listings and home sales are up. So Montreal is performing really well right now. The shift is taking a toll on property values. The MLS home price index is down below year ago levels in all three markets. Adding February brought Toronto's largest monthly price decline in 15 months. Wow. Toronto market is on shaky ground. Toronto market took a hard hit in February with home resales plunging 29% from January. This was the biggest one-month drop since the early days of the pandemic. Hogg points out the current level of activity is now at a cycle low, raising questions about whether the market's recovery can stay on course. Buyers now have the upper hand. A surge in listings is forcing sellers to negotiate. As a result, Toronto's composite MLS HPI fell 1.5% month over month and 1.8% from a year ago. This is a lagging indicator, so you'll probably see it go down next month as well. From a year ago, with condo prices accounting for much of the decline. With a wave of new completions and many investors stepping back, the condo segment could see further downward pressure, especially if job losses start mounting due to trade-related economic fallout, which Ontario is very susceptible to. Montreal sees a sudden slowdown. Montreal's housing market had been making a strong comeback, but February put the brakes on the momentum. Home sales dropped an estimated 11% from January and the biggest monthly decline in 4 years. While conditions are easing, competition among buyers remains strong enough to keep prices on the rise. The median price for single-family homes climbed 8.9% year over year. That's crazy. While condo prices jumped 6.3%, but Hogg warns the cooling process may accelerate if trade tensions persist. Vancouver's market had been showing signs of recovery, which it was, but February erased much of that progress. Home resales fell 15% from January, essentially undoing 6 months of gains. The uncertainty surrounding trade tensions appears to have spooked both buyers and sellers, with many retreating from the market altogether. I've been experiencing this myself, but with inventory already built up, that supply-demand balance has shifted, putting mild downward pressure on prices. The Vancouver area MLS HPI slipped 1.1% from a year ago, so we're only down 1% in Vancouver from last year. Adding that, condo saw the biggest hit, down 2.8% year over year. Detached homes, on the other hand, holding steady with a 1.8% increase. I've been telling you guys about detached homes, and I still have a positive outlook for detached homes, even in the short term. Calgary's cooling. What's next? If trade tensions continue, Hogg expects the uncertainty to keep weighing on market sentiment. Buyers are likely to remain cautious, and sellers may have to adjust their expectations. The impact would intensify the longer trade uncertainty rages. While some markets like Edmonton have remained relatively steady, the overall trend suggests a Canadian housing market facing strong headwinds. Now, if we actually jump into the stats here for the Fraser Valley and just see what March is pacing for, we currently have almost 8,000 listings on the market. So if we go back to inventory, right now we're at 7,000. So in the first 13 days of March, we've already gained an additional 1,000 homes on the market. All-time peak of inventory was in 2008, 10,500 listings. So we are still about 25% away from this, 25% away from this. But if we actually want to look at sales, now this might not be completely accurate. They recently changed how you look at sales on the MLS, and there's like 3 different things you can look at. But let's just look at the seller's acceptance date and see what has gone pending in the last, 14 days. So in the last 14 days, there's been 100 homes pending, but we've apparently gained an extra 1,000 on the market for a 10% sales to new listings ratio, which last month was 25%. Now, again, this may not be accurate because I'm looking at the acceptance date. They're probably going to add some of the subject removals in there, some of the completion dates. I don't know exactly what they're using to calculate this. I think it might be the completion date. Let's look at that. Just for safe measure, we'll look at the completion date as well. So we look at the completion date. It says that, basically 300 home sales completed, which would be a 30% sales to new listings ratio, which still sucks. That's not a good sales ratio. I think a buyer's market is between 40 or a balanced market is between 40 and 60. So you're still in buyer's market territory, but again, adding another 1,000 listings to the market. And if we go back, we did not see 8,000 listings until September of last year, and inventory typically climbs throughout the year until you get into the summer or fall. And we're only now at the middle of March, so we have another couple months of probably climbing inventory, and we may get up closer to that 10,000 listings that we saw in 2008 if we continue on this trajectory. Now, if you actually look at inventory, a lot of this is really coming from condos, right? I mean, condo inventory is basically at all-time highs right now. If you look at townhomes, yes, it's high, but it's not that high in comparison to where it's been in the past. And we look at detached is still like relatively low as far as housing inventory goes. Now, I'm not really seeing prices come down across the board, but what I am seeing is the odd home selling for a price that is a shocking price to me. And usually when one home sells for a shocking price, I think they say it takes 3 home sales to reprice an area. Like I just saw a house in Abbotsford that I thought was a really nice home that probably would have went for $950 not too long ago, go for about $875,000. I just saw a 900 square foot, couple-year-old 2-bed and den in Langley City go for $540,000. That's assessed at $620K. To me, that is a shocking sale. Brand new, not brand new, but almost brand new, 2-bedroom in Langley going for $540,000. That's a good size, assessed at $620. And if you get a couple more of those sales, that's going to reprice 2 bedrooms basically, all across Langley City, right? So I'm not seeing a complete blanket repricing of properties, but I am starting to see the odd sale pop up here and there that is quite a bit lower than what it would have sold for in the past. And if we have a couple more of that, like I said, it's going to start to reprice these properties. But as always, we are basically in peak fear. How much longer can Donald Trump and the Canadians argue on Twitter for about tariffs, right? I mean, at some point, they're going to have to come to some type of resolution on that subject. And right now, we are terrified, so to speak. So despite all of this happening, typically the best time to buy is during peak fear. That's usually when you get the best price. Even today, across most product types and most markets, the best time to buy was right after the 1% interest rate hike in July of 2022. That is still, by the numbers, the best time that you could have bought a property. You got the cheapest price, you got a decently low interest rate. That was the best time to buy, and that was also the most fearful that the market was. So right now, we are very scared. I'm not saying that it's going to be a good time to buy. I'm just saying, fundamentally speaking, that's what fundamental investing would tell you to do. But at the end of the day, you can do whatever you want to do. I'm not telling you to do anything. I'm just here to provide you the stats and what's going on. And if you want to chat with me about buying or selling, you can book a call using the link down in the description. Otherwise, I just appreciate you for being here. Please like and subscribe if you like being here. I'm that Agent Kelly, and I'm making moves to move you. Peace.